Morning, it's Vijay here. Today is Monday, 21st April 2025. Welcome to yet another episode of Pre Market Commentary. Today, I think, will be a very, very interesting day because you see what's happened over last week has been very, very strongly in favor of bulls, and generally, people are now questioning as to whether this rally will last, whether this rally has got any legs, and whether you see are the best cooked. That is what the topic of discussion has been over the weekend. Whether this is only a bear market rally or really bears are being cooked very slowly and steadily by the bulls, or it is going to be a real strong bearish trend which is going to begin. Now there are pros and cons for this. You have seen India leading the rally across the globe last week. Fundamentals are improving, corporate results are improving, whereas global cues are threatening to break this rally. So we'll discuss this during the course as to where we are. So are the bears cooked, or does the rally have legs? Before that, I would like to talk about another tweet from Donald Trump. Yesterday, I was talking about copper being the new gold, and had mentioned that we want to reduce or eliminate our gold holdings because I felt for the next few weeks to months, gold may not do as well as copper. So an alert viewer told me, "Why do you want to cut your winners? You should cut your losers." So my thinking was that sometimes winners also need to be chopped, not because of anything, excepting that if they run up, in our opinion, too much, and if we find a better alternative, then it is good to chop even the winners. Of course, losers have to be chopped. All our money is finite, so we can't be buying this, that, everything. But generally, one has to pick and choose, which we think will do well. So he talks of golden rule of negotiating and success. He who has the gold makes the rules. So the market has literally interpreted it by pushing gold to an all-time high. If you look at this is a gold chart on a weekly basis. It has been almost vertical in the last 6 months. If you look at the RSI, which I generally tend to look weekly RSI, almost doing a double top. See, if you look at these three bars, three this one. So now here it was around much less than 2,800, and now we have crossed 3,000 and odd, 3,400 we are going, and the RSI is about 82. I think on a weekly RSI, if it is more than 82, it has generally not worked out. If you see last two cases, this was a RSI of 75, and yet it fell down, or rather at least it underperformed for weeks together. So I am still going ahead with chopping of my uh, uh, gold holdings, our gold holdings. We have got, as I said, more than 40% return in a year. I think we will maybe more than, actually it's more than 50%. But whatever it is, the percentage is not important here. It looks like completely overbought, and it may take rest, in my opinion. Notwithstanding what Trump has said, I don't think Trump has talked about gold per se. The market has interpreted it that way. He says basically what he would like to say is that I have all the cards, major cards, and you don't have anything. So now on the weekend, we had three major corporate results. We had Infi. Infi came up with poor results, and yes, on ADR it was smashed on Thursday evening. So it's almost like a 2-year low. I think last time it was July 2023. But then it may rally because of the large positions taken. It may rally, but I think it will be only a dead cat bounce as far as IT is concerned, Infosys is concerned. The HDFC Bank and ICICI Bank both came up with very good results. So there is some alert reader who has passed on this information. So if you have time, please have a look at it. This is January March quarter. They have compared HDFC and ICICI Bank. HDFC Bank looks a winner in some, and ICICI Bank looks in a winner in something else. And net profit standalone, HDFC looks good. ICICI also is good, but on operating profit, ICICI seems to be better. Revenue, HDFC seems better. Loan growth, ICICI seems to be better. Asset quality, ICICI wins. Return on assets, ICICI is winning. And dividend per share, of course, HDFC is given a 22 rupees dividend, and ICICI is given 11%. So HDFC is winner as far as the dividend is concerned. So it's a fight between the two, and these are number one and number two on the Nifty in terms of weightage. So you can, I mean, I think both of them should do well. May not be today because maybe they are overbought in the short term. They may open with a gap, and then you never know. There could be a sell-off because of external conditions. So what are the cues this morning? Nifty advanced fourth consecutive day. It's all days last week. Nifty mid cap and small cap also did very well. Generally, the market did well. Nifty Financial Services was the top sectoral gainer. It hit a record all-time high. Just imagine bears and bulls, analysts and brokers are fighting as to whether we are in a bear market rally, dead cat bounce, or a new bull market, and coolly and silently Nifty Financial Services actually has hit a all-time high, not a 52-week high, an all-time high. So banks have done well, pharma, FMCG, IT also advanced for fourth consecutive session. So it may be ripe for some profit booking. Dow Jones slipped 500 points on Thursday because of United Health, and Nasdaq ended flat. S&P also ended flat. But today the futures are not looking good. So this is the other cues are, futures are down over 200 points. Now there is a fight between Trump and Powell as to whether Powell should stay in office. So that will create more of uncertainty on the US markets and therefore on the global markets. Trump also talked of making a very good deal with China. This is what I am expecting. That in the next 90 days, there will be a deal between US and China, and that will be the next, that will fuel the next leg of the bull rally. I'm convinced that we are in a bull market, early stages of bull market, where there's lots of walls of worry. People will hesitate to expand their positions. At every dip, one should be expanding positions. At least I am expanding. I'm not a SEBI-registered advisor. I'm not giving you any advice. What we are doing is we are expanding our positions at every dip, and slowly and steadily we expect the markets to react positively over a period of time. As I keep saying, August 15 should be far better than where we are today. So that is as far as ECB is also planning to lower ECB interest by 25 basis points. Gold, as I said, is record high, and dollar index has broken 99 decisively. That is actually good for India, but emerging markets. But you never know the global uncertainty, what will happen immediately. FIs continue to buy. They bought more than double of what DIS sold. DIS sold about 2,000 crores. FIs bought about 4,600 crores. India VIX is coming down, but this is not something which I really look at it very closely. Market data, if you look from the last 10 days, financials have been leading nearly 9% up, more than 9%. Bank is close to 9. Realty has done very well. Metals are now gaining momentum. I mentioned that yesterday. I'm looking at copper and basically Hindustan Copper. Among many other copper producers, I believe in Hindustan Copper more than others. Though it's a very tricky vis-a-vis Hindalco and Vedel, which are more prominent. So one may have, I'm again not advising anything. IT was the worst performing, though it closed in the positive at 2.1%. So how did India fare rest of the week? Surprise, surprise, India was the best performing market globally. Just remember, till February, from October 2024 to February 2025, India was the worst performing market in the world, week after week, week after week. And today we are the best performing market. Last week, the closest which came was DAX, which is about 4%. We are about close to 4.5%. And Nikkei also did well at 3.4%. And FTSE was close to 4%. S&P, Nasdaq, and Dow. The US markets were the only three major markets which fell last week, and they are under pressure this week too. Then you look at just what's happening on DXY. As I said, it broke 99, and this is a 3-year low. So that is good for emerging markets. But as I said, we need to wait and watch. My issue is with Nikkei. Nikkei has hit, again, it is coming under serious pressure today because the strengthening of N. I have been very concerned about the N. N has now come close to 140. N has never closed below 140 for a very long time. Even in the August crisis, and September crisis, N never came and never closed below 140. A huge strengthening of N may have some impact on India also, because Japanese investors are big as far as India is concerned. So the carry trade will unwind. So we may have some volatility. But whatever may be, I still believe that things are going to be in favor of India and not, against India. So we may have to bear this volatility. We bore in August of 2024, but finally we got to make a new high in August as well as in September. So today I go slightly cautious. Today is a free day, and I push in all my trades onto the free group, also on my Telegram group, where they can see what I'm going to do. I'll still be only long. I have no reason to change my stance, but I think today will be BTFD as usual. But I think we'll have to be much more careful, because volatility may increase because of this end business, because you may see sudden bout of selling. So whatever you do today, I hope it is successful. Thank you for joining me.